Hey guys, Mike here. So obviously with Russia invading Ukraine, that's the topic of the day. We got to figure out, how does war affect the stock market, right? I mean, everything tends to affect it in some way or another. So I'm going to show you the visual of exactly what it does to the stock market going all the way back to 2000 till today. And you'll get to see that. And then I'm going to show you, what happened this morning. The futures were just, red as can be. Everybody's panicking out their mind. And all of a sudden, this major swing takes place at right at like 10:30. I mean, it just started moving up. And you see the NASDAQ and you see the small caps on the Russell just take off. The SPY comes back. The Dow does not really come back, kind of trades sideways. But why is that? What happened, right? And this kind of ties in my video the other day when I was talking about, it may not be the bottom, but it could be a bottom. And all of those indicators I was showing you with the fear and greed index, how many puts versus calls were out there, the AAII sentiment and all that stuff. And that's kind of got something to do with it. So I'm going to kind of show you that. And you can tell it's just 80% of trades are done by algorithms, right? And you can see that this morning because we hit key levels and it just took off. Okay, so I'm going to show that to you. If you're getting out of it, hit the like, subscribe button for me, guys. I really do appreciate that. Make sure you hit the alert all right there to get notifications of the videos and stuff. And so let's go ahead and get into, what war does for the stock market. Does it tank it? Does it make it go up? What? Okay, so let's take a look. And so we know we've had some conflicts and war since 2000, right? And I'm going to put this on the NASDAQ because a lot of us are in high growth stocks. But as you can see right here, when we invaded Afghanistan, but the stock market went up around 37% in 2 months. And this is during the dot-com bubble. So obviously it sold off after that because we were not out of that yet. Then you had the Iraq war in 2003. We went down at first around 7% and then proceeded to go up around 43% for about 300 days right there. And you can see how volatile it is though, right? And then recently you had the Crimean War in 2014. We sold off about 7%. And then you see how volatile this was moving up in 2014 and 15. But it ended up around 27% up within around the 300 days. And I mean, let's be honest, Wall Street don't care about innocent people getting hurt. Okay, they just don't care about anything about that. What they're looking at is, how is it going to affect the companies trading on the stock market, right? And so in this case, how it could affect us is by slowing down our economy, right? Even though we don't, in Russia, we've hardly do any trading with them at all. The EU does a lot. And so what happened this morning? You got corn prices spiking up because it's around 20% of the world's demand. Either comes out of Russia or Ukraine, one of the two there. But you can see that spiked up, and so that's not a good thing. And so you look over at wheat. This went up even more, almost 10% right here, as you can see. And I believe Russia produces like 20 to 25% of the world's demand right now in wheat. And so if you look at the monthly chart right there, you can see this thing is going straight up just like a mountainside, right? I mean, unbelievable. And then of course the big one, oil, all right? The WTI up 8%. You can see it was coming down. It broke $100 a barrel this morning. I think Brent was up around $107 a barrel this morning. And the reason why this is a big deal, because you look at who we trade with, right? Obviously Canada are number one, and these are as far as like people we're exporting things to. But you can see Germany's number 6, United Kingdom's number 7, you got Netherlands, and a lot of other countries in Europe that depend on Russia for things just like this and many other things. And so if those prices continue to surge or the supply chains are interrupted in any way from getting from Russia to their country, then that can hurt their economy and slow it down and send them into a recession, right? Which in turn could slow our economy down because they'll need less exports from us or be able to pay for less exports because their economy has slowed down, and which in turn could send us into a recession, right? And you already got a lot of people in recession watch. It's like the biggest fear, because if we go into a recession, that is not good at all for the stock market. Now, I don't know, maybe I'll put a video out showing you what I'm talking about on the charts on that one. So, you might have noticed this morning though, it was just so red. It kind of, I swear, it almost reminded me of like, I don't know, 08 crash, March 2020 crash, because it was just people panicking. It was crazy. But that turnaround, woof. And so why did it turn around? And I was actually starting to make a video this morning. And, one reason is, it's like I told you the other day, when we get down to these levels right here, we hadn't been down to these levels that much. I even drew this back to 2015 now, and we're at 20% on this fear and greed index. We've only been there 4 other times since 2015, so almost 6.5 years ago. And so, you know, when we get there, that's when we start to see some kind of move up, whether it's a temporary move or, you know, or whatever, you don't know. But this right here is the kind of stuff you got to pay attention to. The put call ratios, which I showed you, the AI sentiment. I mean, that thing is almost 100% on. And so, you know, if you look at the NASDAQ, what happened? It hit the 20% sell-off mark. That is not an accident. And as soon as it hit it, it did a complete U-turn and started just ramping up. This is like a 5-minute chart right here if you can look this up on. But I mean, you see it just moving, and you see right now, I'm recording this is right at the end of the day. It's bouncing off that, what used to be support, now resistance level right there. And then you go on to the Dow. The Dow didn't do that though, right? The Dow gaps down, doesn't even come close to filling that gap, right? Just kind of traded down, then came back up to where it started, right? Because a totally different set of stocks, okay? And then you look at the SPY, same thing right here. Broke through that support level, comes down, bounces, just takes right on off. And so now it's back up to around the 10%, still in correction territory at this point in time. But, you know, you look at the big one, this is the one that shocked me the most, was the Russell 2000, small caps, right? This thing had been trending down, around that trend line, just bouncing down, going down. It breaks the support, pops right back up, and then breaks through that trend line for the first time in a few days. And I'll tell you the most suspicious thing to me right now about this rally was the stocks that were 10% or over. There was a whole bunch of small cap stocks up between like 20 and 35%, right? Some I've never heard of. But then there was others who had been thrown out with the bathwater. You know what I'm saying? I mean, any of the NASDAQ stocks, the high growth stocks, the high multiple stocks, however you want to label them. And, you know, they're going up double digits today. I mean, as you can see right here, you got Open Door up 17%. I don't know what happened with the space stocks, but you got Rocket Lab, Astra, and Redwire all up between 10 and 16%. I didn't see any news on space, but they're up. Upstart up 15%. Moderna's 14%, Roku 14%, CrowdStrike 13%, Palantir, which was down 7%, broke $10 this morning, pops up, and actually it's up at 12%, but if you count the drop, it would have been up like 18% from that bottom, which is just crazy to me. Teladocs up 12%. And so one, if you know anything about the space stocks, is there something I missed in the space stock news? Hit us up in the comments, let me know about that. But it's suspicious when I see these stocks which have just been pummeled. You know, a lot of them have gone through earnings already. You know, just valuation is just absolutely smashed into the ground. You know, and there's nothing new, right? I mean, there's no news out there that should make the stock market rally like this, right? I mean, we literally just had prices go higher on commodities, which doesn't help our inflation battle. This is the last thing we want when we have March 10th coming up for the new CPI data, because this could drive that number even higher, which would be a disaster, by the way, if that number comes up way higher than what we're expecting, which could happen if these commodity prices continue to go up, right, for a long period of time. So that could be terrible. There's nothing new. I didn't see any news out of the Fed or anything like that. That's why I get suspicious with moves like this, especially on a day like today. But most likely what happened was you had an overreaction, big time. You would have thought somebody invaded us. It was so red this morning, right? And you know, then obviously once you start hit certain key levels, you know, those algorithms are going to kick in and start moving it up. Then the retailers are going to come in and follow right along with it and start moving it up. And, you know, I heard a fund manager talking today, and he said, you know, honestly, remember, some funds have to buy. They have to continually keep buying. And so when you see some of those prices, they're like, we might not ever get another chance to get it at this level. We might, who knows? You know, but again, when you can get, you know, the triple Qs on a 20% discount, or, you know, especially the Russell 2000, I think it was around 24% down, I think, at one point in time this morning. And so, you know, or you see Palantir go below 10, you know, and it rallies back. And so I don't know what's going on with the space stocks again, but they rally too. And so, you know, let me know in the comments what you think. We'll see what happens tomorrow. Tomorrow is Friday. You know, I'm definitely going to be watching the commodity prices, all that good stuff. Like I said, nobody can tell you if that was the bottom or just a bottom. You know, even those charts I showed you when it comes to war, you know, 2 out of those 3 conflicts, or actually 1 war and 1 conflict, it sold off about 7% more after that, right? Which technically in a way was about, we did about 2% this morning we sold off, you know, and then it started going back up. But the one thing you see in all those charts, any charts I ever show you, what do you see overall? The stock market goes up. It continues on. It is, you know, disconnected from a lot of different things, okay? And they try to think 6 months ahead. So, you know, the big question is, how many rate hikes have we already priced in? How much of the Fed balance sheet runoff have we already priced in? How much in higher commodity prices? Have we already priced in? You know, because there's still just a lot of uncertainty with all this stuff, which is what the market hates. But, you know, let me in the comments know what you think. I think a lot of stuff has been priced in. We just don't know what they haven't priced in yet. So we'll see. The one thing we do know, the VIX is still high as can be. It's going to be volatile. We are still going to have major swings up, down, you know, for the next few weeks at least, probably till March 10th. We'll see. And so if you got any ideas, guys, hit the like and subscribe button for me. I really appreciate that, guys. And don't forget to hit all on the alerts right there for yourself. And I'll end up seeing you tomorrow.